Welcome to No One Asked, the podcast where we talk about things literally no one asked us about. I'm Julie Barrett.
And I'm Sarah Wilkes. We're two friends, two realtors, and way too many opinions.
Life, real estate, and whatever chaos shows up.
No one asked, but we're saying it anyway. We have talked about FHA. We have talked about USDA. So today we're going to talk about
VA.
Yes. So we've been talking about low down payment loans. And VA is especially one that we see a lot of times.
It is. And that's something that I feel like sometimes is overlooked. It's for veterans, active, retired, even eligible surviving spouses.
Mm-hmm.
And I feel like that's kind of overlooked with a lot of veterans might not realize that they could get a VA loan.
Oh yeah, and I've actually had some clients before that have never used their VA benefits to purchase a home. I guess either they weren't informed of it or felt like whatever route they chose was a better route.
I mean, we never have.
Really?
Yeah, we never have.
That's interesting.
I
was
know.
going to say odd. I'm sorry.
It is odd and interesting.
That's a little weird.
No, we never have. And
because what do we always say? Use what you have.
Yeah. Well, because when we first bought our first house, we didn't know that was really a thing. And then you just go on to the next one and the next one, and I was new into real estate when we bought our house we're at now, and I didn't think about it. I just thought, oh, I'm going to have a down payment, and all that. You can have a down payment with VA. This doesn't mean that you can't, but I just went ahead and went your traditional route, but I don't know. Who knows? Maybe next time I will.
Well, I mean, yeah, there's so many benefits to using VA. First of all, I think it's something that's wonderful for people who have served our country. I think it's, great amount of respect to all of those individuals for doing that. And I think it's wonderful that they have a loan program for those individuals as well. But there's a lot of benefits to a VA loan that we know about now. You may not have when you first got in.
No, not when I first, right.
So, first of all, they're 100%. So that's great. You still have closing cost money, just like with every loan.
Right. Closing costs and funding fee. There's
and
a
the funding fee is an extra closing cost expense.
Right.
But the funding fee can be added on top of the loan, but the closing costs cannot any longer. They still have to be technically, you pay them or ask for a concession.
Right. Concessions from the seller.
Right. Which I turned the air on because it was a little stuffy.
Your face is priceless.
Hold on, please.
We were on a roll.
I was so proud. We hadn't even messed up.
So our studio is amazing, and the air and the heat work perfectly.
And loudly.
And
they work loudly.
It's just a little loud. So we either freeze or burn up when we record.
Yes. So if you see us shivering, that's why. It's cold outside. Where were we?
Okay.
We said there's lots of benefits. Okay.
Benefits, and then we were talking about closing costs and funding fee.
Okay. So with closing costs, that's still something that the buyer has to pay. They can ask the sellers to technically pay them. We call that seller concessions.
Correct.
But the seller does not pay it until closing.
Right.
So it just is more of a paper trail.
Yes, because it's taken out of the seller's proceeds. It's not like out of their actual pocket closing.
Yes.
And then there's the funding fee with the VA.
Yes, and that's a fee that they add on. Now, that one they can add on top.
And always check with your lender. But I believe if you are like 100% on VA disability, the funding fee can be waived. Like you don't have to pay that.
And that's great.
So that would be an extra benefit and bonus to not have to come up with an extra couple $1,000s.
Right. And the one thing about the VA loan that's a benefit over FHA and other loans, that the banks will charge something called PMI. What that is private mortgage insurance. Now, you hear insurance and you think that means, oh, this is a safety thing for us. It is not, does not benefit the buyer whatsoever as far as you will feel.
Right.
What it does is if you don't put 20% down, you have to carry this, and it's an amount of coverage for your lending institution in the event that you default.
Right.
So I say all of that to say VA does not charge PMI insurance.
Right.
So your payment would actually be less on a VA loan than an FHA.
Yeah, and sometimes that PMI is high.
Yes, can be pricey.
Yes.
There's I used to know the formula. So if you were qualified for VA and FHA, you might truly think about doing the VA route for that
Mhm.
reason alone.
Mhm.
The guidelines for the houses are very similar.
Yes, like, so there's a trend.
Yes.
There's a trend. We've talked about chipped paint. We've talked about handrails and heights of the handrails,
Broken
broken
windows, leaking
windows.
roofs. None of those
So that
can happen
trend
here.
still continues with VA.
Yes.
And VA also, this is one of the very few that actually requires an inspection, but it requires a termite inspection.
Oh, yeah, you have to have
Mhm.
one, and it used to be the seller had to pay for that regardless.
Yeah, now the buyer,
That's changed
yeah,
now.
the buyer can do that. So the process for using a VA loan is just like any other process.
Mhm.
You know, you have to provide your documentation. You do have to provide your COE,
Or a certificate of eligibility.
right?
If you do not have that, your lender can get it for you,
Yes,
or if
yes,
you're active status, that's a different
right,
document.
right. And then your bank statements, everything else involving any other type of loan, you provide that. But then the process is still just like anything else, 30, 45 days,
Mhm.
you know?
Doesn't really take any longer than any of the other loans that we have
No.
mentioned.
The only thing that can hold it up in my experience is not every appraiser is VA certified. So you
Yes.
have to wait for an appraiser in that rotation for the VA loans to be able to come out. But I mean, usually,
Which brings us to a sidebar
oh no,
moment.
oh no,
Appraisers, you can't choose them, you
no, you
cannot pick
cannot.
them.
They're in a
And
rotation.
sometimes you can refuse an appraiser if you had a bad experience with one at some point. However, I did have that occur at one point, and a seller of mine did not want a certain appraiser, and the VA said, well, either you let this appraiser come or this person doesn't buy the house.
Ouch.
So, yes, it hurt my feelings very
Yeah,
much so.
yeah,
So just keep that in
yeah.
mind that we have zero control over the appraisers, but especially with VA, they have to be VA approved.
Right, right. And that's why the timing could delay that a little bit, just waiting for somebody to get it on their schedule, the rotation.
Now, we have run into some people, they have in their mind that the VA is harder, takes longer. They think about government. They don't
It
want
really
to, but
doesn't.
it does not.
No.
The seller can choose a loan type. If you have two different loans or two different offers at the same time, and one's conventional and one's a VA, depends on all the rest of the terms.
Right.
They may choose the conventional, but if they have an educated agent who's presenting both offers to them,
Mhm.
VA most of the time is not going to have an effect on that.
Right. And just because you find something online that has the word veteran
Does
involved,
not mean they are from the veterans.
no, and it also does not mean that you can't go elsewhere.
Yes,
We have a handful of lenders, I mean, that do all of these loans.
absolutely.
USDA, FHA, VA, all of them, conventional. You don't have to go online. I suggest you not go online.
There's been a big ordeal about one of
Yes.
them that had the term veteran in their title, and you would not believe how many people would come to me and say, "Hey, I'm approved with
Yes.
this name," and it was everything within me to say, "Are you sure
Mhm.
you want to use that?"
Mhm.
Because their costs
Are astronomical.
were so much higher. And what they
Yes.
would do, what this one lender would do, would give you a percentage of what they looked at closing costs in this area.
Mhm.
So it didn't matter if you were buying a $200,000 house, a $50,000 house, or a $800,000 house, they use this percentage.
Mhm.
And that is absolutely not what anyone else was charging.
Oh, absolutely not.
In fact, when that lawsuit came out, when I saw it on the news, I screenshot it and sent it to one of my clients
Mhm.
who had been approved with said company that
Mhm.
I was like, hey, let's check one more place.
Yeah.
And I sent her a screenshot and I said, I'm so glad you went a different route. She said, oh, me too. I'm so thankful.
Yeah.
So definitely do your homework yourself or ask us. And you can always shop around. You don't have to pick the first lender that you speak with.
Right.
But definitely, just because the term veterans in the title does not mean they are a representation for you, a better benefit to you, that you have to use them, any of those things.
Just because they have the word veteran in their title does not mean that they're greater than somebody else, like on a local level.
Right. Absolutely not.
I mean, it's all the same government process.
Right.
So, yeah, I would rather talk and work with somebody that I could actually meet with,
Go sit in front
go
of.
sit in front of, or whatever, versus just somebody I just chat with, in a chat box.
Absolutely. Or when there's 400 different hands that
Oh,
take
that's the
hold of that file.
worst.
There are some big companies that do that. And it's not that they're bad. It's just you don't have one contact
No,
person.
no.
But most of the local lenders here stay on top of it, stay in touch with you.
Mm-hmm.
I mean, and they are, remotely as well. It's just sometimes it's easier to be
Right.
able to go down and see them in
Right.
person.
Right. Well, when you have to submit documentation,
Oh,
it's so much easier sometimes. And I know some of them have apps and stuff like that, and that's great. But sometimes just that one-on-one is just
or
the
if you have to,
cherry on the top.
or if you have to brainstorm, sometimes there's issues. Sometimes
Right.
there's things that we can just go down and say, okay, let's sit down and figure out a solution to this problem.
Mm-hmm.
But that's not necessarily just VA, that's any loan. Something else that you'll need to know about your VA benefits, it would be your entitlement amount. Now, this is a different kind of process for VA than anything else. Entitlement is what you're allotted from the government
Right.
that you use towards a house. And I think if I'm understanding it correctly, it's kind of like you can use a certain percentage, which I think would help. I may not be saying this right, so I'll let you take it.
You'll let me take
I'll let
it?
you take
I don't
that.
know what you're going to say.
I don't either, apparently.
Just
Anyway,
because you see, like, if you did pull up your entitlement, your certificate of eligibility, and you saw your entitlement, and it says, say, example, $36,000, that doesn't mean that's your loan approval. It's some
right.
type of formula that they take, and they formulate that to figure out what you can buy.
Yeah, I think it's from what I read, because I've always heard this term and I always knew, why we needed to know it, but I wasn't for sure how to explain it. But I think from what I've read, it's basically why you're not charged PMI because the
Mm-hmm.
government backs, it's kind of like your
It's
cosigner,
kind of like
they
your
back
government
you.
backs it. Yeah.
Yes, for a certain amount.
Right. So going back to the process, the appraiser comes out. If the appraiser dings something on the report,
It has to be
it
done.
has to be fixed, just like anything else.
Yes.
There's no getting around it. Like if the seller wants to sell the house, it has to be done.
Yes. But, again, this is where you defer to your realtor when it's your house that you're selling, or if you're the veteran buying it, you ask your realtor, or we'll just freely tell you what we think could come up in that.
Mm-hmm.
And we try to be proactive and try to handle all of that. The biggest issue normally is the steps, knowing that height.
Yes.
But other than that, we can pretty much eyeball a property and be like, oh, this may come up, and prepare the sellers or the buyer both for that situation.
So one time my buyers were VA. They found this house. It was beautiful. It was perfect. It was cedar siding. Okay. It had like a detached little shed that was chipped paint all over it. And let's see, it had cracked windows. I mean, all the signs that I'm like, y'all, this is iffy. Well, the window was fine. Either it wasn't seen or I don't really know. The building, the appraiser wanted it repainted or torn down. And then they had to stain the house.
The whole house?
The entire house.
That's a lot.
Yeah.
Even a small house, that's still a lot.
I say the entire house. It was a big house. It was definitely one side, maybe it was, I think, two sides. I mean,
it's still staying.
It's still staying at the house. Staying the house. That was a new one for me. I wouldn't have thought that would have been an issue, but it sure was.
That one I wouldn't have seen coming necessarily.
Me either. I knew about the building. No big deal. And even my clients they were like, well, I mean, when it comes up, like, we'll come and tear it down if it's okay, stuff like that. But no, I mean, they just sprayed the building. They didn't tear it down. Stained the house. And here's the thing. It was late fall and the weather wasn't cooperating. So how do you get around that? A letter of intent.
Oh,
Yes.
that's smart.
Yes.
But now what I was getting ready to say before you threw that curveball is that the appraiser does have to come back and verify these things are correct and done. Did that appraiser come back and verify later?
After
it was done.
Yes.
So his job wasn't over.
No, and that was a new one for me. But the seller had to provide receipts where he had purchased the products, send in pictures where it was in his vehicle. Then they escrowed some money.
Just in case he
Just in
did not
case.
do it.
Yes. And then the appraiser went back out, and I guess everything's fine.
But just so everyone understands, it is much easier to get those repairs done prior to closing, because when they escrow those when we say escrow amounts, if a repair isn't done, whatever loan type requires it, if a repair isn't done at closing, they'll take proceeds from the seller and they put it in the closing agents, like the title company's escrow account, where it will sit until
those repairs are complete.
And when they escrow more than what your estimate would be. So that seller's
extra 10, 15%, or is it 20?
I think it's an extra 25.
It's a big amount.
Yeah, and the seller does get that returned to them once it's been completed, but they hold that just in case it's not done.
Yep.
So I mean, they're pretty serious about their repairs.
Yes, they are.
But luckily, like I said, we pretty much can eyeball that most of the time.
Yeah, the siding was a new one for me.
Now I will look.
Same. Lesson learned.
I mean, just like I'm going to tape measure the next time I have a front porch without handrails.
Yeah. We need to learn to measure it, like, okay.
It's right here. Yeah.
From walking by, it hits me at my lower hip.
Yes, that will work. I mean, mine be at my shoulder, but that's okay.
But the takeaway from this is, if you want to buy a house and you have little to zero money for a down payment, there are options.
Absolutely.
There are options.
And like we always say, you don't know until you try. Don't be afraid to try because you're afraid of rejection, because everybody has been told no at some point in their life. We've been there. We said this last time. We will probably be there again.
Absolutely.
And so there is absolutely nothing to worry about. We're a judge-free zone. Your lenders, if they are good lenders, are not going to make you feel bad. They're going to say, hey, don't worry about this. We're going to get this resolved later.
Right.
So, you never know.
And we do not know anything that the lender sees. We do not see that.
No, if you choose to tell us and involve us in that, we'll help you with everything that we can.
Right.
But we do not know what's on your credit report. We can't pull your credit report.
No,
we don't see any of that. That's why we refer you to the lenders. Now, if you tell the lender they can speak with us, then that's different, or sign off on that. But we do not automatically know anything about you other than what you tell us.
Right. Well, this has been informative.
Yes, we hope you guys
have been.
We think it's been fun. We hope that you guys have enjoyed it and that you maybe learned a little something. If you have questions, comments, we welcome those. You can drop a comment. You can message us. We would love to hear from you all to see if you're benefiting or enjoying this, and let us know what you would like for us to talk about.
Yep. Well, I don't want to say yep.
I say yep all the time. Are you judging?
Yep. You know what I say all the time when I edit these? Right. I know, right? I mean, we could go on and on with all this series about loans and all that kind of stuff, but I think this probably concludes the 3 to 4 major ones.
Low down payment.
Low to zero down payment. And then, of course, there's all kinds of different types of different loans.
We wanted to just get you started with the basics.
Right.
In case you or any family or friends are wanting to get started or had questions in general. So this will get you started. But we're still always here for other questions.
Yeah.
So until next time.
No one asked.
But we're saying it anyway.